Hello and welcome to another edition of the Technical Market Update. My name is Beyond Dale, and today we're in the evening of the 8th of October. And remember, the reason why we keep an eye on charts is because prices tell us what is happening. Prices lead us and tell us if the market is going up or it's going down or it's going sideways. Now, just a broad overview, we see that S&P 500 is still in a broad uptrend. We had some price weakness recently, and the market declined into the 1920 era, just above 1920. But today we have a pretty strong bullish day, and what we can expect is some follow through buying from this bullish candlestick pattern. Now, what will cause this S&P 500 to come into some question is if we close below the 1900 level. If we close below this 1900 level, that would mean and that would signal that this market may be in for some weakness. So we'll keep an eye out on the 1900 level. But for now, things remain bullish, and the prices are telling us that the market is still in a broad uptrend. And how do you know an uptrend? A series of higher highs, higher lows. So we see the market moving up steadily. Every retracement is higher than the previous. This point, let's call this point D, is higher than point C, which is higher than B, which is higher than A, and so on and so forth. So we're in a series of higher highs and higher lows. Now, eventually, this series of higher highs and higher lows will end, and the market will retrace pretty significantly. But for now, the market is in an uptrend. Now, taking a look at the Dow Jones Industrial Average, we see a similar pattern to what's happening in the S&P 500. We're up quite significantly on the day. The market retraced slightly. Market made a new high, and the new high was just below 17,400. Market retraced and is looking pretty good to continue the move upward. So we're going to keep an eye out on that. What would cause concern is a close below this low at 16,400. That will give me some pause that this rally could be in danger. Taking a look at the Nasdaq has been very strong recently and has definitely seen a pretty significant rally off of the lows that occurred in 2009. And similarly with the Dow and the S&P 500, we are in a broad uptrend. Now, a question I get quite often is what posture I'm taking. Am I bullish? Am I bearish? Am I neutral? Well, because my entire investing philosophy is to follow what prices are doing. Prices now are in an uptrend, and they have been in an uptrend over the last 4 years. So I remain committed, and I see that the market is still in an uptrend. So I'm not putting on new positions at this point in time, but I will hold on to what positions I have now because of the uptrend. Now, as I keep saying, eventually the uptrend will turn into a downtrend, and then we will then change our posturing at that point in time. We're not here to predict anything. We're just here to follow what the prices are telling us, and they are telling us we're in an uptrend. Now, of great interest over the last couple of weeks was the strength in the US dollar. And after seeing folks saying that the dollar is back, we have had a pretty significant pullback this week so far. Now, what's happening in the dollar? We see that the market broke out of a longer term consolidation pattern. This is a monthly chart of the US dollar. And this is what we call in technical analysis a triangle. We see that the market was in a consolidation pattern, not really going up much, not really going down much. And we broke out of this triangular consolidation pattern, which could signal further gains for the dollar. So we'll keep an eye out on that. But for now, the dollar is in a pretty strong uptrend. We are getting some pullback currently, and we'll just have to watch the direction in the dollar. Some good plays that were made recently was the down move in the Australian dollar. This is the US dollar gaining against the Australian dollar. This is the US dollar gaining against the Japanese yen. So we have seen some pretty good moves in the dollar that would have offered some good profitable opportunities for the diversified investor. Okay, taking another market of great interest is gold. We see, if you notice the consolidation in the US dollar, we also see a consolidation here in gold, and you see that the market is in a broader downtrend. But since the middle of 2013, we are in a triangular consolidation pattern, with the high being just up below 1450 and the low being just above 1170. Now, this consolidation has lasted over a year to a year and a half so far. So what we can see, or what we're looking for, is to see if the market breaks out of this consolidation pattern. If it breaks to the downside, we could see a pretty significant move down in the gold market. And a rule of price analysis is sometimes the market will exit in the direction it came. So it was coming, it entered the consolidation in a downtrend, so it may exit in a downtrend. But as usual, we let prices guide what we're doing. And what we're seeing this week is that gold is seeing pretty good support down at 12, down at the 1180 level. We see that the market bounced off of this 1180 level, which should give some hope for the gold bulls. But if this 1180 level is lost and the market declines below it, we could see a pretty significant move down in gold. Pressure wouldn't be taken off of the downside until the market is able to close above 1350. So the levels in gold is 1350 and 1180. Looking at the crude oil market, we see that this market is also in a broader consolidation with some slight negative price movements. Currently, price of oil is coming down off of a high of just below 108, and again the market is in some consolidation. Let me just draw it to illustrate it here. Market is in a triangular consolidation that has lasted ever since 2011. And why you haven't seen recent highs in oil is because the market did not eclipse the high that was made in mid 2008. So after 2008, we had a huge collapse. The market recovered and has just been in a consolidation pattern ever since. So that's what's happening in the oil market. Another market of interest, we're going to take a look at the 30-year bond market, and we see that bonds are attempting to rally again. So that is something we will keep an eye out on in terms of a market that is possibly looking to start trending. So exactly what's happening in the markets, and I hope you enjoyed the video. If you have any questions, please send it to my email, info@smartinvestorcentral.com, info@smartinvestorcentral.com. Please look out for my podcast on iTunes, the Smart Investor Podcast. And if you like this video, you can hit subscribe on YouTube or wherever you are watching the video. Thank you very much, and thanks for listening.